Welcome to the Coffee Shop, everybody. This is your host and barista, and in today's video I'm going to show you something special in lesson plan number 3. It's a lesson plan that I did with a group called Trade with Confidence. The link to the Discord is below. Today we are going to go over invalid pivots, and those are swing points where the price will come back to that level and blow right through it like it's an order block. And then it stops, right? Well, you need a nice strong consolidation area. This is not a good one to look at. 10-second chart does not give you like good consolidation areas. So, all right, so that covers like how to spot liquidity, right? What's next on the quick little list we got here? Liquidity, high lows, invalid BC wave. Okay, so let me tell you what an invalid BC wave, right, is. And I think I covered that a little bit, right? Nope, that's not my screen. That's not my screen. That's my screen. Okay, wipe this out. There. So we've got a B, C, D, right? A to B, B to C, C to D, right? You call it wave 1, wave 2, wave 3, whatever you want to call it. Right? Here, here, there, right? So you've got A, right? You got, yeah, I don't want to draw that out. You guys understand what I'm saying. That's going too deep. So you've got A to B, B to C, C to D, right? There's a time when your BC wave is invalid, right? I'm not talking about the double top. I'm not talking about that. I'm talking about this one here, B to C. There's a time where it's invalid, okay? It's invalid when it is longer or the same length, right, as your A wave. Okay, it cannot be like that. Flat out, it cannot be like that. If you ever have a price action movement where you get a nice big push like this, then you get a retracement to the same exact level, okay? And the close of that candle, be careful. You've got a candle here. I want you to know what this looks like. You got a candle here with a wick. The wick is there, okay? And then, let me just kind of move this over here because I want to copy this. Okay. So you got your low here, right? There's your low. Price moves up, price moves down. And you can get a low or you can get a low or a close right there, right? If the close of this candle, if it is anywhere less than the low of this candle, this length is invalid. It means nothing. You can't use it. You no longer have a move up. What you have is a liquidity run, or you have a manipulation, or you've got a news event, or whatever the case may be, right? And once I continue drawing this out, you're going to see what this actually is, right? And you guys have seen this a million times in the market, at New York Open, at 1030, stuff like that, right? So this first part of this wave becomes invalid. Let me just kind of put it back there just for the sake of having it, okay? So we already know that price moves up, moves flat a little bit, right? And then price moves down, and then it starts moving up again. And it gets to some point, and it moves flat a little bit more, okay? What you get is this huge, I mean, you end up getting what looks like this massive, let's just say this is a nice long power move down, power move up, you know? What this is, when I kind of shrink it down and get rid of this first wave because it's now invalid. I'll show you again why it's invalid. The close of this candle came close to or less than the low of the start of the move, okay? You cannot be underneath this A wave. You can't be underneath that. So you do not, you don't judge any of that. You pretend it's not there when you're analyzing your chart, okay? What this ends up being is those massive, right? It ends up being those massive hammer candles that you see on the 1 hour time frame. Okay, that's what that ends up, that's what that is. It ends up looking like that. And what do you call it? I think one's forming here. Is it? Yeah, that's pretty close. It looks like this big valley that comes up On a small time frame, it looks like a cup and handle, right? Here's a cup and handle, right? And the price is supposed to just skyrocket up afterwards. It's not there. You end up with this like, hammer candle, dragonfly, whatever you want to call it, right? That's what ends up being. If you get a invalid BC wave, then you have to remove the first part of the wave. Do not analyze any part of that. You don't even care about the buying or selling pressure because it was all wiped out in this wave. There's too much overpowering selling pressure, okay, in this length of the wave that it doesn't respect any of this. If a wave is not respected, you do not analyze it. It doesn't exist. That's all. So that means all you're looking at now is what's happening inside this leg, okay? And that's what I'm going to get into next, which is the order blocks that take place inside this move, okay? So there's that thing. Any questions about that one, okay? And it's an invalid BC wave, like when you see price moving a certain way, okay? This would be one of them. Price moves up, price moves down, right? And then it moves up again. The close of this candle is down here. You don't want it down there. The length of this is the same length as this. Pretty much. It's pretty close, right? It's pretty close. You don't want this. So this is not a move that you want to care about. You only care about this. So then what is it that you do look for? Okay. You can attempt to look back at not this low, but the previous valid low, right? You got a high and you have to skip to there. So this becomes your move, right? That becomes your move. If this was resistance and this is support, and you've eliminated the first part of the wave, you keep the other part of the supporting wave. Now you know where your resistance actually is. This was resistance. There was so much resistance. Get rid of this. There was so much resistance, right, in this leg, okay, that it superseded what came before it. I already removed it. There's so much resistance here that you have to count this as a resistance zone. It pushed down to the same level as that low. So you have to say, okay, I have a bearish order block, or I have lots of resistance here inside the candles. 9 out of 10, you're going to get a false high over here, and price is going to start pushing down and get below this level. This is exactly what happens here. And that's the other reason why, looking at price action, you know that this is a divergence, right? Where's the RSI? Right here. Here's a high, right? Here's your high, here's your other high. It's in a downtrend. In the stochastic oscillator, this is not a high because it's not above zero. You've got a high and a lower high. So you've got a divergence on two different indicators. And you can tell simply by looking at how the ABC moved on price action. So as long as I can get you guys to understand a lot of these like finite candle movements, you won't need indicators. You would simply look at the candles, you know. But the indicators also help because they're really cool to look at. They kind of smooth things out for you and can give you values of like how far you can go in the market, right? So let's get rid of that. I don't need it. Get rid of that. I don't need it. There. Any question about that BC wave, that invalidation thing? Okay. And again, that works on any kind of wave, right? Any leg of any wave. It doesn't really matter. Okay. Because on every leg of every wave, if you're moving in a direction, you want the retracement to be shorter than both of the impulse waves. So you got an impulse, retrace, impulse. On a really good, strong trend, right? A really good, strong uptrend, you've got an impulse, a shorter retracement, and this secondary impulse should be longer than the first one. That simply means the buyers stepped in, the sellers stepped in. They weren't able to push it down far enough, so the buyers stepped in again. And that means your, supporting area is now from here to here. All of that is support because they were able to push this up longer and through this. So wherever this goes down to, like let's say it goes up here and starts retracing, okay? It's much longer than the first one. So your supporting level is no longer just this or whatever that wick is. You don't have to count that wick anymore. you can literally add the two of them together. Now you've got a whole supporting level, and it's just all the way out. That's how you know you got a nice, strong supporting area. When you look at candles themselves, like I said before, you can see them doing the same thing. There may have been videos that you guys have seen, literature that you have read. All right, everybody, thanks for watching that. That was lesson number 3, and we're going to move on to lesson number 4 shortly. Invalid pivots are awesome because you can treat those areas as places where price is simply going to go through it. You're going to find continuation patterns in those levels. See you in lesson 4.